When?
Recording started.
Yay. Okay. Good morning. Today we are going to finish up Chapter 3, and we've got some administrative stuff to do at the end. So it is working. I just didn't have it. Okay. So just a reminder what's due this week. We have Attendance Quiz 10. That will be available starting around 5 p.m. today in my accounting lab. It covers class from Monday and Wednesday this week. And the Chapter 3 homework, do allow yourself plenty of time to do the homework. It's a little bit longer because this chapter is longer than other chapters. There is no quiz this Sunday, September 29th, because of the exam. The next quiz will be due Sunday, October 6th, I believe that is. Do check the schedule. I'll send out a reminder, but it's the Sunday after the exam. So that will cover Chapter 5, which is what we start after exam week. Okay, exam. I'm going to talk about the exam specifically at the end of class. I just want to get it in the recording early. The exam is next week, Monday, Tuesday, Wednesday. How you take it depends on what section you're in. All the exam information is on Blackboard. I cannot stress enough the need to look at exam info in Blackboard. Okay, how you find exam info in Blackboard, there's just that really quick link on the left that'll get you to where you need to be. Depending on what section you're in, your exam info will look a little different, but it tells you what you need to do. I will also be following up with an email in the next 2 days or so that reinforces how you're taking the exam. So that's coming. So no class next week, Monday and Wednesday. Your responsibility next week is to take that exam and to do well on the exam. So Monday and Wednesday, no class. We have video quiz 11 due Sunday, October 6th, covering Chapter 5 videos. Okay, now I've gotten a couple comments where people say, well, I don't know where to find the class recordings. There's multiple ways to get to them. You can actually view them through Collaborate. But what I did, the change I made, is every video is now public. It's not an unlisted link anymore. And there is a link directly to it on Blackboard. So if you want to click on YouTube class recordings, every video for the class, the class recordings and any extra ones I do on how to do a homework or something will be there, and you can subscribe to that channel actually if you want. So just know that that's a new addition. Okay. Okay, starting with exercise 324A then. And again, after we go through the exercises for today and the questions for today, then I'm going to talk about the exam. And I do have something kind of, well, we'll talk about that when we get to exam stuff. So we're going to do a couple homework problems today. And again, we're continuing with this idea of adjusting entries. Adjusting entries are made at the end of the period. At the end of the period, we do a trial balance first to make sure our debits equal our credits. And then we need to do adjusting entries. And adjusting entries adjust the accounts to reflect economic reality. So the accruals, the deferrals, the depreciation, we do all those adjusting entries. Then we do an adjusted trial balance with these new balances, make sure our debits equal our credits. And then the next exercise we do, not this one, but the next one, we'll talk about what we do at the end of the period to close our accounts. So exercise 324, we've got a series of transactions. So we're just practicing adjusting entries here. So the first one, the business has interest expense of $9,600 that it must pay early in January. So this is December 31st, 2012. And they know that they have interest expense of $9,600. They'll be paying it in January, but they incurred the expense in December. So they need to recognize it in December. So what they're going to do is they're going to write a journal to recognize expense. We're going to debit interest expense, and we're going to credit interest payable. So what we're going to see there is we're going to see that debit to interest expense, credit to interest payable. Once again, I urge you somewhere on that exam review sheet to have adjusting entries listed. You don't need to figure out every adjusting entry. When we look at interest payable, when it says we have interest expense, the adjusting entry is going to always debit interest expense and credit interest payable. It's good to walk your way and be able to figure out a journal entry, and that certainly will work, but you use a lot of time and energy when you can just say, here's interest adjusting entry. We went over adjusting entries, entries on Monday. We have several here today. So first one, A, we debit interest expense. Interest expense is increasing, so we debit it. Interest payable is a liability, and we're increasing it. We're recognizing that we owe this interest, so we're crediting that to increase it. Okay, next one down. Now, interest revenue of $4,900 has been earned but not yet received. So what we're saying there is we've earned this. A bank somewhere, maybe we have our money on deposit somewhere, but the bank owes us $4,900. So we've earned it, but we're not going to get it quite yet. So we need to recognize that. And this is interest we're owed. So this would be interest receivable. Interest receivable is an asset, and we're going to debit it for the $4,900, that interest receivable. It's like accounts receivable. Accounts receivable are amounts we're due from our customers. Interest receivable is amounts we're due from someone that has our money. And then we'll credit interest revenue because we've earned revenue. We increase revenue with a credit. Again, these adjusting entries, I would not rustle my way through them. I would have them listed and say, when I know I have interest earned, here's my adjusting entry. It's going to look like this. Okay, the next one down. On July 1st, when the business collected $12,000 rent in advance, it debited cash and credited unearned rent revenue. The tenant was paying for 2 years' interest. Okay, so that's a lot of information given to us. The thing we need to acknowledge right off the bat, when we see that we got $12,000 of interest or rent paid in advance, that's unearned rent revenue. What kind of account is that? Liability, yes, exactly, because we have the word unearned to begin with, then we have the last word revenue. That is a liability account. Now, that $12,000 rent in advance, notice that it is for 2 years, right? So we have $6,000 per year. Now, one more thing to note, the date on this, July 1st, okay? So let's start with, this is $6,000 rent per year. Now, July 1st, we collected this. It's December 31st. How much rent have we earned? $3,000, right? Because we've only earned from July 1st to December 31st. What we need to do is recognize that we take the 6,000 times 6/12, okay? So that we're saying 6 months out of 12. So this one, the big thing you need to remember is that you have to read the date carefully. And that happens a lot with adjusting entries. We don't always collect rent on January 1st, so it's a full year. In this case, we have 6 months of rent revenue. So what we're saying here is we collected this July 1st, $6,000 a year. 6 months has gone by, so we've actually earned $3,000. So the amount of this entry is going to be for that half-year amount, the $3,000. So what we're going to want to do is we're going to want to decrease our liability, the unearned rent revenue, and then we're going to want to increase rent revenue. So there's what we're doing for that adjusting entry. And again, the numbers in the parentheses, I'm just reinforcing where we got the $3,000 from. You have to adjust that because it is half a year. Okay, the next one down, salary expense is $1,900 per day. So it tells us Monday through Friday, and the business pays employees each Friday. So this year, December 31st falls on a Thursday. So on Thursday, at the end of Thursday, we will owe 4 days of $1,900 per day. That's expense that belongs in this last year. So what we're going to do is we're going to take, what's 1,900 times 4? Tell me it's 7,600. Yes. Yes. Okay, so there is one typo on this where it says salary expense 1,900 should be times 4, not 3. Yeah, I can't write on it. I can't fix it. So 1,900 times 4, 7,600, so the amount is right. Just the 3 should be a 4 there. Okay, so we have 4 days at $1,900 per day, 7,600. We're going to increase salary expense because we had Monday, Tuesday, Wednesday, and Thursday in last year, and we want to also increase our liability there to recognize that as of the last day of the year, we owed salaries. We had a legal obligation for the $7,600. So again, that's 1,900 times 4. Okay, next one down. The unadjusted balance of the supplies account is $3,200. The total cost of supplies on hand is $1,400. So what this is telling us is supplies, before we do our adjusting entry, supplies, the asset, is $3,200. Now, but they're saying when we go to the supply room and count everything, we actually have $1,400. So what happened to the difference? We used it. Yeah. So we used it up. So what we need to do is we need to recognize the difference. The $3,200 minus $1,400 gives us $1,800. So that represents what we used, right? So if we started with $3,200. Total cost $1,400. The difference is what we use. So we're going to debit supplies expense and credit that asset. That asset is named supplies. That is an asset, and we need to reduce its balance for the amount that we've used. Okay, and then F. F is the most complicated one of these, and it requires a little more explanation than the other ones. Equipment was purchased at the beginning of this year at a cost of $80,000. The equipment's useful life is 5 years. So basically, if we take $80,000 and divide by 5 years, that's how much depreciation expense we will have a year. Now, the sentence where it says there's no residual value, that's just to tell you at this point you don't have to do anything else. So you don't have to do anything with that. When we get to the chapter on equipment, plant and equipment, property, plant, and equipment, we're going to see residual value and learn about that. At this point, it's just saying we can take $80,000, divide by 5 years, and that'll tell us how much depreciation we have per year. So we're supposed to record the depreciation for the year and then determine the equipment's book value. Okay. So depreciation per year, that $80,000 divided by 5, $16,000 a year. Our depreciation entry is always going to debit depreciation expense and credit accumulated depreciation. Okay, this is a very standard depreciation journal entry. You're going to debit depreciation expense, credit accumulated depreciation. Accumulated depreciation, again, is a contra asset. It belongs with the assets, but it's completely opposite. Its normal balance is a credit. It gets deducted from the asset, so it is a normal credit balance. Now, the last part of this requirement says to record depreciation for the year, which we did, and then determine the book value. Book value is the original cost less accumulated depreciation, okay? So book value, original cost minus accumulated depreciation. So what we're going to see in this case is we're going to have the $80,000 original cost less the accumulated depreciation of $16,000, so the book value is $64,000. Okay, you'll have to do that in the homework. It'll ask you the book value, original cost minus the accumulated depreciation. It's basically saying how much is not depreciated yet. Okay, so those entries, okay, here's just a summary of any of them if you need to jot down any clean up any that you have. Now, these entries that we just did, the numbers in parentheses, and again, the 1900 in entry D is 1900 times 4, not 3. Those are pretty standard entries. These are standard adjusting entries. These aren't every single adjusting entry, but I would certainly have these entries and the ones we did on Monday, the ones that don't overlap. I would put those on my exam reference sheet. Okay, so just to reinforce that, I would have the adjusting entries somewhere on that exam reference sheet. Okay. Okay, so we have a question now. A company started the year with 400 of supplies. During the year, the company purchased an additional 1,200 of supplies. There were 700 of supplies on hand at the end of the year. An adjusting entry prepared at the end of the accounting period includes what? So we have to look at what that journal entry is. So you need the supplies journal entry. We just did it, so you can look at the supplies journal entry, and then you should be able to narrow it down to 2 of these answers, and so then you have to figure out the amount. So we're going to pause for a minute while you do the calculation, then I'll take some answers, and we'll see how we did. I'm going to go back on here. So right now we're going to talk about which 2 answers it has to be. Okay, so we'll get our odds down to 50-50 because this is a good strategy, right? You see what I'm saying? Okay, so which two do we have to choose from? C and D. It has to be C and D, and we know that because our adjusting entry debits supplies, expense, and credits supplies, right? So even if you don't know what you're doing, you have those adjusting entries off to the side, you can say, wow, it has to be C or D. So you've now narrowed your choices. Now, I don't know what the answer is. I haven't done the math in my head. I don't remember it. So do you know what it would be? Do you know how you would do it? Yes, you would take the 400, add the 1,200, and subtract the 700. So what you're going to see with that, so the 400 plus the 1,200 minus the 700 gives us 900. So the answer is going to be C. It's going to be debit to supplies expense for 900. But you see where having those journal entries off to the side somewhere can at least narrow your choices down. Okay. Okay, onward to the last topic, kind of the last topic in the chapter, closing the books. Now, at the end of so we go through the period, we prepare this trial balance, make sure our debits equal our credits, then we do our adjusting entries to make sure everything's adjusted to reflect economic reality, and then we do an adjusted trial balance to make sure we're still in balance. And then that final step after we've done everything else is to close the accounts. What we're doing is we're closing the temporary accounts. We're closing the accounts that need to be reset each year. If you think about, let's just take revenue, for example. When we look at a revenue account, we know that revenue account is for this year. So if I look at sales revenue this year is 200,000. Then when we go through the end of the year and we start January 1st, our sales revenue for 2013, for the next year, is not $200,000, it's zero. We haven't sold anything in that year. So we need to reset our revenue account to zero. We need to reset all our expense accounts. When we talk about our supplies expense this year, we're talking about supplies for 2013. When we start 2014, we start with zero supplies expense because we're starting over. So there's only certain accounts that get closed, that reset. This would be our revenues, our expenses, and our dividends. Now, so this is revenues, expenses, dividends. A nice acronym to remember that is RED, okay? So that's something. What accounts are temporary? What accounts do we close? Those red accounts, revenues, expenses, dividends. Those all get reset. The reason we don't close, say, for example, assets. Let's say we have cash at the end of the year, and we have $12,000 in our checking account, okay, last day of the year. We start the first day of the year, how much cash do we have? $12,000. It doesn't disappear. It's an actual physical asset. We have a building that's worth $200,000 that is on our books for $200,000. The end of the year comes, we start the first of the year, we still have that building for $200,000. Liabilities the same way. We owe a loan at the end of the year. The first day of the year, we still owe that loan. So not all accounts get closed. Only the revenues, expenses, and dividends get closed. So what we're going to do here is we are going to do a closing entry exercise. Now, this exercise, I put the red acronym at the top. It gives us a list of accounts in random order. So we've got a whole bunch of accounts. We may not use all those accounts. We'll use some of them, maybe not all of them. And it's asking us, the first sentence up at the top says, prepare the closing entries. Here's the information. And then below that, it's asking us the net income and to prepare a T account for retained earnings. Okay, so we're going to do all of this. The first thing we're going to do is prepare closing entries. So closing entries, the first one we do is red, which is the revenue closing entry. So how we do this, the closing entries, by the way, will look very much the same over and over. You know how I said have your adjusting entries on your sheet? You should have closing entries too, because these are another easy way to pick up points because they're the standard. Okay, what I do then for my revenue closing entries is I go through the list of data I'm given and look for all the revenue accounts, okay? So when I look through this list, I see only two accounts that are revenue, service revenue and other revenue. So what I'm going to do for my closing entry is I'm always going to debit the revenue because I want to wipe it out, and I'm going to credit retained earnings. So now there's a reason we're debiting it. The reason we're debiting revenue is because revenue has a normal credit balance, so to close it we have to do the opposite. And so that makes sense. But at this point in your learning, the best advice I would give you is write on that sheet, closing entry for revenue, debits revenue, credits retained earnings. It's always going to be that way. When we're closing revenue, we are always going to debit any revenue accounts and then credit retained earnings for the total of those. So our closing entry for revenue might be service revenue, debit, credit, retained earnings. We might only have one revenue account. It could be called sales revenue. It could be called service revenue. It can be called other revenue. But you debit any and all revenue accounts you have. You credit the total to retained earnings. That is a revenue closing entry, period. So these closing entries are not worth wasting brain power over when you can just put them off to the side. Here's my closing entries. There are 3 closing entries. We're doing all 3 of them right now. So this is one of them, okay? Okay, so now the next entry is the next entry in the red acronym. We have revenues, we just did it. The next one is expense. So what we're going to do with the expense entry is we are going to go through that list of expenses. So we're going to go through and pick out, I don't have them circled, but as we run through the list, cost of services sold, that is an expense account. Cost of goods sold, cost of services sold is an expense account. Selling, general, and administrative expenses are an expense account. Depreciation expense is an expense account. Income tax expense is an account. So this one you're going to have the most variation in, but absolutely you will debit retained earnings whenever you close expenses. You're always going to debit retained earnings, and then you're going to credit every expense account you're given. So the account titles for the credits to expenses can be different. So you can write on your sheet, you debit retained earnings, and you credit all the expenses. So whatever expense accounts you have, get credited. Now the reason we credit expense is because a normal expense balance is debit. To get rid of it, we need to credit it. But again, I would put those the expense closing entry on my sheet. Debit retained earnings, credit every expense account you have. Okay, for your closing entry, you credit every expense account you have, okay? Now, so you've written down the 11,000 from the table, the 6,400 from the table, the 4,100 from the table, and the 500 from the table, okay? Your debits have to equal your credits in a closing entry, so you would add those up, and that's how you get the 21,000. Thanks for the question. Okay, or 22,000. So I'm adding up all my credits to get my debits. Okay, so we've done the revenue closing entry, we've done the expense closing entry. The only entry left is the dividends one. So the dividends closing entry, we are going to go through and we are going to debit retained earnings and credit dividends for the amount of the dividends. So that was an account given to us in the second column, about halfway down. It told us we had dividends of 300. So we need to close those. Dividends have a normal debit balance, so we'll be crediting them. Again, this entry to close dividends will always debit retained earnings and credit dividends. In some problems, you may not have any dividends, and that's okay. So if you don't have dividends, you don't have to do this entry. But this is the closing entry, always for dividends, debit retained earnings, credit dividends. Okay, so those closing entries, this is just summarizing what we did. Now, the question says, what's our net income, okay? Our net income, think about the formula for net income. Net income is always revenues minus expenses. So my closing entries, my first closing entry, my retained earnings, was the total of my revenue. So we had $24,300 as my revenue. My second closing entry, that $22,000 retained earnings debit, that was the total of my expenses. So if I want my net income, I can take my revenues of $24,300, subtract my expenses of $22,000, and I get net income of $2,300. So the question says, how much is net income? That's how I'm going to calculate it. Dividends never, ever, ever impact net income. Okay? Dividends are a return of principal to, or a return of capital to the owners. They're not considered to be part of expense at all. So when you're asked to calculate net income with closing entries, you take your retained earnings revenue amount, subtract your retained earnings expense amount. Okay, so in this problem it's $2,300. Now we're not done yet. The problem then also says to prepare a T account of retained earnings. Okay? So what we're going to do then, okay, so it says prepare a T account for retained earnings to show the December 31st, 2012 balance. So something to note in this is in that table above, see where it says retained earnings December 31st, 2011, it's $2,600. That's our beginning balance of retained earnings. So when we have this T account, what we're going to be doing is we're going to be putting in our beginning balance. Then we're going to put in our adjustments that we just made in those closing entries, and then we'll come up with a new balance. So, with that line, T account, retained earnings. First thing we do is put down that beginning balance that we're given in that table. So this 2,600 we see here, that was coming from the table, the bottom of the first column where it says 2,600, that's where this is coming from. Retained earnings, the reason I put it as a credit is retained earnings has a normal credit balance. So unless they told me retained earnings was negative, it goes as a credit. Now those closing entries we just made, we were debiting and crediting retained earnings. So we have to put those closing entries in here. So these closing entries, okay, you already have these written down. See where we credited retained earnings for 24,300? We debited retained earnings for 22,000. We debited retained earnings for 300. So we have those, we already wrote those down, but what we're going to do now is we're going to put those in our T account. And there's two things right now. I want you to write this down, and then I'm going to talk through where these numbers came from. So go ahead, I'm going to go silent for a minute while you write this down, then we'll talk about it. Okay, now assuming you've gotten all this written down, some things I want to call out. First of all, December 31st, 2011, that was our beginning balance. That was given to us in the problem. We know it's a credit balance because retained earnings has a normal credit balance. So retained earnings always going to have a credit balance unless you're told it's negative, which would be not a normal situation. A regular situation. The other thing that I do want to point out here, so we're going to credit our revenues, debit expenses, debit dividends, but the other thing is we draw the line and then we get the balance of the account. And how we get the 4,600, that is the balance of retained earnings. How we get that is we add the 2,600 credit, we add the 24,300 credit, and then we subtract the expenses of 22,000 and we subtract the dividends of 300. So we get 4,600. So it's the same as adding up our debits, adding up our credits, taking the difference and putting them on the side which is bigger. Okay, now the revenues, the expenses, and the dividends. Okay, I just want to point that out just to be clear. That's where I'm getting those amounts. That first, these are the closing entries in the lower corner. That first closing entry, retained earnings, where we credited 24,300, that's where it's showing up on the credit side of the T account. The debit to 22,000 expenses shows up on the debit side, and the dividends are also posted to the debit side. So that's how you would do exercise 329A. Okay, so a couple questions here. Closing entries. A, are made at the beginning of each accounting period. B, prepare the accounts for the next period's transactions. C, cannot be done using a computer. D, are the same as adjusting entries. Do you know this one? B? Okay. I think that's pretty good. Okay, Brian, what do you have? Everyone's saying B. Well, my sample size of 1 said B. So, oh, you have 21. Okay, well, I did 1 and got the right answer right there. Okay, so the answer, closing entries, prepare the accounts for next period's transactions. Okay, next question. Which of the following accounts are considered permanent accounts? A, inventory and cost of goods sold. B, land and accounts receivable. C, accounts payable and revenue, D, common stock and salary expense. Okay, what's your running tally, Brian? But overwhelmingly, not 100%? Well, I have 100% of B. Oh. Okay. Yes, I did a sample of 1. Yeah. I beat you. So I have 100% correct. Then I'd be asking another 20 people. Yeah, okay. So good. Okay. Which of the following accounts are considered permanent accounts? That would be land and accounts receivable. Now let's just talk about this. Inventory, is that a permanent account? Is inventory a permanent account? Yes, it is. Okay. Cost of goods sold, is that a permanent account? No. Cost of goods sold is a temporary account. Okay, accounts payable, is that a permanent account? Yes, because it's a liability. Revenue, is revenue a permanent account? No. No, it's a temporary account. What about common stock? Yes, it is. Yes, common stock is a permanent account. What about salary expense? No, because it's an expense. Okay, so there's that one. Okay, now what I'm going to do now is I'm going to run through some things. I'm going to talk about the exam sum. I wanted to leave plenty of time for questions. So let's start with, again, reminder of what's due. We have an attendance quiz available today starting at 5. It's due Saturday, Chapter 3 homework. Leave plenty of time. No video quiz due Sunday because of the exam, but quiz 11 is due next Sunday after the exam over Chapter 5. Okay, so just a reminder. Now, exam next week. I cannot emphasize enough the need to view the exam info on Blackboard. There's important stuff you need there. I've gone through the rules, all of that. There is no class Monday and Wednesday next week. Your job next week is to take the exam. Your job between now and then is to see Blackboard for complete details. Accounts payable, I'll answer your question. Accounts payable is a permanent account. It's a liability. The only temporary accounts are the RED, the revenues, expenses, and dividends. Okay. Okay, here is your bonus for coming to class today or viewing this video later. This will not be posted on Blackboard. The only way you know about this is the fact you're here. So it's one of these things. Ooh, I'm glad I came, right? Okay, what? Yes, it's an advantage. But you'll be able, if you're watching this later, you will see it as well. It's not going out via any posting or anything, so you want to write down the URL. Okay, the URL is http://tiny.cc/exam1review. Okay. When I say also on Blackboard under exam info, I'm saying you also need to see that information, but this link itself will not be on Blackboard. This is the bonus for coming, for being here, or for viewing it later. You probably will get an email from me urging you to watch the complete class today. But this is our bonus, so to speak, for getting to this point in the lecture. Okay, so let me talk about this Exam 1 review sheet. First of all, I've not done one of these for about 10 years, okay? So this is something I'm trying for this exam only. I'm not promising it for future ones. Your exam has multiple choice questions on it and exercises. Your exam is in My Accounting Lab, okay? You would go to My Accounting Lab during the exam time. It's there. You click on it, and then you have to have a proctor put in the password. You can't email me and ask me for the password. That's not how it works. The proctor puts in the password. But your exam will appear in My Accounting Lab. So in My Accounting Lab, the exercises on your exam are about 25% of your exam in terms of total weight. Those exercises are coming directly from study plan, okay? So study plan in My Accounting Lab is set up so that you can practice the content. So what I've done is, in your homework, you've had lots of exercises. We've done exercises in class. So then what I did in study plan is I took some of the exercises and put those in study plan, okay? So it's a smaller population than what we had in class. And I'm telling you right now that virtually every exercise that you see on an exam for the whole semester comes from study plan. So if you're talking about minimizing your practicing, use study plan to practice for those exercises. Those exercises are not listed on this review sheet. Those exercises are in study plan. Those should be easy points for you. They will look on the exam exactly like they do in study plan, except you don't have the help me solve this and ask my instructor and all those cool little buttons, okay? But they are in study plan for you to practice. I encourage you, strongly urge you to practice those. That's about roughly 25% of your exam. I would not go back and practice homework because those same problems are in study plan. The advantage to using study plan for it is that you get a smaller population. It's not as many. I've cut it down to I'm telling you, here's the important ones. Now, I've also put some practice multiple choice in study plan as well. So you would be well served to practice those as well. But I don't list the exercises on this review sheet, okay? So you need to be able to do those exercises that are in study plan. You need to be, and your exam reference sheet, remember we don't call it a cheat sheet because that implies you're cheating. You're not. Exam reference sheet. You want to make sure that that you put down any notes about those exercises that you need for assistance to go through it. But it's going to work just like your My Accounting Lab homework, and that's why we're putting it in there. She's asking me which exercises to focus on. You should focus on every exercise that's in study plan. Okay, because I have already told you by putting them in study plan, those are the ones to focus on. So that's the advantage, not going back and doing your homework over. You get that same homework. I will also tell you that you absolutely need to view the exam info on Blackboard because there's a video I put together. You want to watch that because in there I show you the best way to use study plan because there's a quiz me option. I don't really care for that, but in the video I explain why. I do a screenshot. So you want to make sure you view that video. Okay, so the exercises, so this 25% of your exam, approximately 25% of the weight of your exam is coming from those exercises I've put in study plan, okay? So I've taken the most important ones I feel out of homework, put them in study plan. There's still a fair number in there, but you need to practice. Accounting is not the kind of thing that you can just look at and go, yeah, it makes sense. You're going to need to practice it. There is no easy button. I have so many times, I cannot tell you how many times I'll get an email from a student, like usually if our exam ends Wednesday, it'll usually be Tuesday night, somebody will email me and say, I don't have a lot of time to study, so can you just tell me what I need to study? Well, if I could do that, I would be telling you right now, and I'm telling you right now what you need to study. There's no shortcuts. I mean, I've made as many shortcuts as I can for you. So you've got 25% of your exam weighted in study plan. Those should be the easiest part for you because you've got it exactly. These are the problems, different numbers, but if you practice it, then you can do it. It's going to look just like that. So you can't even say, it didn't look like anything I saw before. It does look because it's coming exactly from what you did before. So there's the 25%. So now we come back to this exam 1 review sheet. Okay, so how I did this review sheet is I sat down with every multiple choice question, virtually every multiple choice question on the exam. Okay, so I had it, or the target population for the exam. So these are the questions I would consider for the exam. So what I did is I wrote the topic of every question on that sheet. Okay, so the sheet might say current versus long-term. So you need to know it. I did break it down by chapter, so it's got 4 chapters listed, and I just listed the topic of each question. So to prepare for the multiple choice, certainly the practicing and study plan will help prepare you for that. There's things during class I've mentioned, like I would absolutely have my closing entries and my adjusting entries, and those debit and credit rules, that blue handout, the debit credit handout, where you have to reason your way through, those are things that I would put on there. So what I did on here is I said, okay, here's these topics for these questions. Now, it's about 2 pages of topics. Those are things I would certainly go back through my notes, make sure I had what we talked about in class. I would be going through the book, looking what the book says about that topic. There is some overlap chapter to chapter. And so that review sheet's meant to say, make sure you're comfortable with these topics. Now, the thing that I'm not going to do about the review sheet is I've listed as much information as I'm willing to say in terms of directing you. So I don't want you to go to the review sheet and then ask me, well, can you tell me more about what you want, or no. So that review sheet, I'm not going to answer any more specific questions about it. I'm just providing you a list of topics. So as you go through your reading, these things I consider to be pretty important. And so some of them are little broad topics, but these are things that you will see questions on, or the possible population. So, and like I said, I haven't done a review sheet for about 10 years because I don't want to narrow down and not look at other things. Certainly, yes, you need to read the whole chapter, but these are things that I felt were more important than other things. And just to say this again, in case you're doing the slider bar later and watching this link that's on the screen, the only way you're going to see the link is through this recording. So it's not going to be posted anywhere, so you'll have to type it in. Okay, so there's that review sheet. It is PDF format, and so you have it written down. Okay, so let me see. Let me just see what I've got next here. Okay, so I'm going to leave this back on here. So now I'm going to take questions. So you have questions. This is your chance for questions. Yes. Wait. I'm going to let you ask the question. Is that okay?
Yeah.
Okay.
So the exam reference sheet, is it a card or is it a piece?
The exam reference sheet is a 2-page PDF document. And no. Oh, I'm sorry. The one that you make, not the one I make. Okay. Okay. Yeah. Sorry. I was just. I'm still back on this one. Okay. The exam reference sheet. I would urge you to look at the rules on Blackboard, but it's an 8.5 by 11 inch, 8.5 inches by 11 inches, one piece of paper, front and back, written or typed or whatever you want. Any color ink. No. Oh. I should have brought it. Okay, so 1 year, please don't do this, but 1 year, you know those little advent calendars where you pick up the little flaps, you know? Somebody brought an exam reference sheet. I didn't include the picture, yeah. Somebody brought an exam reference sheet that looked like an advent calendar on steroids. There were like multiple flaps and all this. Please don't do it because you'll make our Hall of Fame for the, that was one of the most outrageous ones we've seen. So it is one sheet of paper, all joking aside, one physical sheet of paper, okay? Not 2 taped together, not flaps, you know, because the person said, you said one sheet of paper, and the person's contention was it was all taped together. So in case you're wondering why I'm being so specific, it is because of those things. So just want to make sure we don't lose anyone on this. Okay, yes. Wait. Do you mind? Okay.
If we're in Section 8, can we still take the exam lab?
If you're in Section 7 or 8, you have to take it using ProctorU. And you actually have a huge advantage because you won't have to wait in line. And you can also go, and if you want, use the library equipment. you can take it wherever you want. So the library does have equipment if you want to do that. Okay? Okay, any other questions? Yes?
How many questions are on the exam?
You stumped me. I don't know. Seriously, no. That's part of that information on Blackboard. I think approximately, and I'm just wild guessing here, okay? Yeah, I think there's about 3 to 5 exercises and maybe 25, 28 multiple choice. But I did give you specific ranges on that. But the average student, so if anyone's average, but the average student on this first exam, it's going to take about 45 minutes. Okay, but you have 2 hours. The timer starts when you start your exam, and there's no stopping that timer, so it goes. But average-wise, you have 45. Most people have finished, and again, that's dangerous to say 45 minutes. You have to, if you're taking the exam in the computer lab, you have to be sitting at a computer by 8 p.m. or they will not let you start. They will not let you start an exam if you have less than an hour to take it. Okay, anyone else? Do I have anyone? I didn't even look behind me. Okay. Okay. Do you have any questions? No more? Of course, you all know this all because you're here. It's 7:45 in the morning. It requires a certain amount of dedication. What about you? Any questions I can answer for you? Feeling good about it? I don't mean to make light. I know exams are stress-inducing. The average on this first exam in the past has been about 70%, 70%. Nothing would delight me or excite me more than to have an average higher than that. I will tell you that the second exam is lower than the first. So, yeah. Oh, it's harder material because it builds on it. Even though it's not cumulative, you know, everything you need for this exam, you need for that exam for the basics. So you've got to get, but I don't go back and put problems from, but when you're in that next exam, you have to know debits and credits and all that. So if you don't get it this time, you're going to do even worse. The exam scores will typically range from about 20% to 100%, okay? After the exam is over, I will post a list of the scores without names, of course, just sorted from high to low, and you can locate where you fall on that. Typically, I'll have a few or more 100% on it. So there'll be people that do very well on it. Typically, what I see, the people that do very well obviously spend time in study plan, practicing the material. It tends to be quite challenging. So this is why all along, if you've gotten an email from me where I've said you've got to do better and you're looking at it going, I'm getting 95 on the homework, why is she harping on me about 95? Because inevitably, if you're getting 95% on the homework, 5% of it you're not getting right? That's what's going to show up on the exam, and then it'll really hurt. So you need to work towards the 100% on the homework because you will see homework problems appear on the exam. You need to keep up with everything. And I really don't mean to scare you, but 70%, if you think about it, that means half the people approximately are higher and then half are lower. And so I would love it if we got a higher score, so a higher average. We'll see. But when I've got people with hundreds and all the way down, you'll see. So afterwards, it'll be full disclosure. When you take your exam, and I do, some of this I'm repeating from the exam info on Blackboard. When you take your exam, I can't discuss the exam with you until after everyone's done. I cannot discuss exam performance over email because that's just impersonal and that just, it doesn't feel right. So after the exam's over, the week after it's over, to see your exam, you can't see it online. To see your exam, you will need to come and see Brian. He doesn't know this. So, yeah, so surprise, Brian. After the exam's over, he'll have some times, we'll be posting those times that you can come and see him, and then you can talk with me about it. Yes? Wait.
Say you can't see like your exam, you can see the score, like it gives you your score automatically on my accounting lab, correct or no?
Yes, that is correct. You will see your score immediately. So there's that moment of heart beating before you go, okay, let me see it. So yes, you will see the score. You just won't be able to review the exam itself. So, okay, yes. Oh, wait. Okay.
Can you go back on a question? Say you answer it.
Yes, you can go back. You can go forward and backward however you want. You just need to make sure. Do not, and okay, so here's something that recalled to me. Let's say during the exam, something funky happens to the computer, like it freezes. I already said the average person will finish in 45 minutes. You have 2 hours. So, you know, you've got time. So don't panic. If your computer freezes during the exam, you will have to restart your computer. If you're in the lab, you call the proctor over. You will go back into the exam. They'll log you back in, and you'll be right where you were. If you do see a button at the bottom, there'll be a submit button, and I can't remember off the top of my head, but if there's a save button, you might want to do that occasionally. Don't submit. Once you submit, it's all over, okay? So you submit, you're done. But if there's a save button, you might want to do that. But if there is a problem, it's not submitted until the time's up. And if you run out of time, it's going to submit. And if you don't see your score on the screen, if you go back into results, it'll have your score there. Now your average in the course is going to change. It may change radically, depending on what your average is, because the exams are weighted. And up to this point, your average in the course just shows your quizzes and your homework. I saw a question up there. You were wondering where the computer lab is. The computer lab is on the second floor. It's the same floor we're on right now, just at the other end of the building. It's in 226A, and there'll be proctors in the back of the room. By the way, if you're in the section 7 or 8 and taking it with Proctor U, I just said if you were in the lab and your computer froze, you know, you'd have to call the proctor over. The big thing to remember if you're taking it with Proctor U is do not close the proctor window until you submit your exam. There's a person there so you can talk with them and say, is it okay if I close it now? Because what happens if you close the window before you're done, before the exam's over, your exam reverts to 0. So you just want to make sure that you talk to that person and make sure it's good. Proctor U, there's a live person there right now, right all the time. So you're not wrestling with some technology that doesn't understand you. So if there's any problem, you talk to your proctor. At any time during the exam or after the exam, if there's any issue, and I don't know what that issue could be, there's very few issues. But if there would be an issue, so let's say, I don't even know what would happen, but let's say there was something that happened. Absolutely, positively, after that exam's over, I want to hear from you. Just a lesson in life. Don't say, oh, the proctor said he would contact her. I want to hear from you. It's your exam. It's your responsibility. It is much more important to you than to that proctor. So you want to make sure that you follow up with me, and then I can follow up with the proctor if there's some issue. And know that I am monitoring my email very closely during an exam. If it's an emergency, you'll probably hear from me pretty rapidly. But give me some time to respond. But do know if there's something, I am watching closely. I will be proctoring during the exam in the lab some. Brian will be proctoring some during the lab. When we are there in the lab, we are there as proctors. We are not there to answer questions about the exam, because that wouldn't be fair to say, oh, if you happen to take it when I'm proctoring, I can help you. No, we're not helping you. I'll smile at you, I'll wave at you, but I'm not going to answer questions for you, okay? And neither is Brian.
Neither will I.
Yeah, okay. Okay, any other questions? And I'm not meaning to make light of this. I know exams are stressful. I know all of that. Okay, so let's say the worst case happens. You submit your exam and you get that 20, okay? Or you get a score that you didn't want, you know? And so, okay, deep breath time, and then it's time to come and see me. There is, and none of you need this option, but if, worst case, you say, I completely bombed it, I don't know if I'm going to be able to recover from it, and I'll contact these people, but we have another section of this class starting October 17th. So if something completely, you get derailed completely, it's possible to start fresh on October 17th with a different section. But most of you, the 745 class goers, don't need that information. Okay, anybody else? This is our last time together for a week, okay? And you've recorded this, right? Everyone's really happy they came today because you're not going to see this in an email, okay? Okay. Okay, good luck on the exam. Oh, no, wait. No, don't good luck yet. Wait.
How much extra credit is this, or bonus, or whatever? You said this was bonus.
This is not like added to your exam. This is bonus because you don't get this any other way.
So it's not like extra credit, it's like an extra help.
Yes, it's extra. It's not extra credit. Sorry.
Okay.
I didn't mean to let you down. Here I was really excited about this. No, it's not extra credit. Sorry. Yeah, okay, you're still excited. Okay, great. Okay. Have a good weekend, but not too good. Have a great exam. Okay.